business.
Backed by popular demand, this is a video that has been sought after, and we're going to give it to you now. How to fill out the 2020 W-4 using a tax withholding estimator for a person who is head of household. And in this case, this person will have 2 children. Hello, you got Mr.
and Mrs.
Smith. And as I stated in this brief video, this video is a person who was filing head of household and they have 2 children. We're starting from a different place. If you've seen any of our other W-4 videos for this year, I wanted to start here because they had some key nuggets. Listen, before you begin, check number 1. Gather the most recent pay statements for yourself and if you are married, for your spouse too. Check 2. Gather information for other sources of income you may have. Check 3, have your most recent income tax return handy. And check 4, use whole dollar amounts in the estimator. So the most recent income tax return doesn't apply to the scenario we're about to give, but certain cases it does. But you definitely want to have the check stub handy, your most recent check stub handy for sure. And keep in mind that the tax withholding estimator's results will only be as accurate as the information you enter. Note, this application requires JavaScript. That doesn't matter, but it will only be as accurate as you're allowed to be. So all I did is go to irs.gov, find the tax withholding estimator. So we're going to click right here where it says use the tax withholding estimator, and it'll take us directly there where we start about you. Notice we said that this person is filing head of household. So the first thing they want to know is filing status.
All right, filing status. What filing status will you use for your tax return? So for this person, it would be head of household.
Why? Why is it head of household?
It's head of household because they have dependents, you guys, that they are claiming on their tax return. So it's different from them just being single. Okay, you can't be head of household if you don't have dependents that you are filing on your return, okay?
Nor can you be married. Keep that in mind.
Nor can you be married, right. You have to be a single individual with dependents according to the IRS, all right? Can someone else claim you as a dependent on their tax return? No. How many dependents do you anticipate claiming on your return? 2. Do you or will you hold a job this entire year with paychecks from which federal income tax is regularly withheld? Yes. How many jobs do you expect to hold? 1. Will you receive income from a pension this year? No. And number 5 is other. Of course, the IRS wants to know if you got other streams of income coming in, such as Social Security benefits, unemployment, self-employment, unearned income, such as dividends, interest, annuities, alimony, all of that good stuff. In this example, we're going to leave all of those blank. And under demographics, this person will not be 65 or older on January 1st and is not blind.
Next, income and withholding. Enter your income and withholding for each job and or pension you will earn income from this year. Each job should be entered separately. The order in which you enter them does not matter. So, your job. Do you expect to hold this job the entire year, January 1st, all the way through December 31st? Of course, we're not expecting to get fired around here or quitting. How frequently are you paid? In this example, we're going to say that this person is paid every 2 weeks. So do we usually do twice monthly? 2 weeks.
Every 2
weeks. Yeah. Notice that every 2 weeks is different from twice monthly. Quick example, every 2 weeks is every other Friday. That counts as every 2 weeks. Twice monthly is the 1st and the 15th, or the 5th and the 20th. That's twice monthly. So understand the difference between the two. This person is every 2 weeks. On what date did your most recent pay period end? So at the recording of this video, we're in February, so it'll let you know that right now it's the 19th. So their most recent pay period ended. Let's calculate, because I want it to be in alignment with the other videos. Initially, they got paid here on the 3rd, the 17th, the 31st. Skip the 7th, so the most recent pay period ended on the 14th, which was Valentine's Day. They got paid on V-Day, so they were able to show some extra love. All right. Enter the total wages you expect to receive this year. We're going to roll with $45,000. This is the total amount they expect to receive based on whatever job that they have. Enter any bonuses. They don't have any bonuses to enter, but basically the IRS wants to know where your money is coming from, how much is coming from it, and how they can tax it. Using your last pay statement, enter the total federal taxes withheld. So in this example, we're going to go with the year to date. Keep in mind, this is all going to be revealed on your check stub. You don't have to guess any of this. You're going to look for the year to date, and this person's year to date is
$1,728.
So 1,728 is what you put. And then from the last check, each and every week, they get taxed
432.
432. So all that is 432 times the 4 paychecks that they've received for a total of 1,728. Did you or will you contribute to a tax-deferred retirement plan such as a 401k? In this example, we're going to put no. If you do, then always remember that anytime that you're going through this, if you don't understand the question, you can always hit this little question mark, and it'll elaborate on what that question is asking. And if it fits your scenario, then you fill it out accordingly. There are perks to contributing to the 401k from a tax perspective. That's not what this video is about. So we'll proceed. Did you or will you contribute to a HSA, FSA, pre-tax child care account, or other cafeteria plan? Keep in mind, if you don't know what that is, hit the question mark and it'll elaborate. In this example, the answer is no.
All right, so the next thing is adjustments to income. And it says most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? Let's go ahead and just look. Let's look at the adjustments. So this is things like student loan entrance, educator expense, deduction for contributions, health savings, moving expenses, alimony, penalties, and certain business credit for residents, performing artists, and fee-based government officials. So for this one, we don't have any adjustments, so we're just going to go to the next step.
Deductions from income. You qualify for a standard deduction of $18,650. So they're letting you know that you qualify. Based on what you've entered, you qualify. So when they ask this question, understand that you already qualify. Deductions reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. Would you like to take the standard deduction or itemize your deductions? So your standard deduction that you qualify for, being head of household and you having 2 children, is $18,650. The reason why they say most taxpayers take the standard deduction is because if you're going to itemize, the number that you are competing with is this $18,000. So if your itemizations are not more than $18,650, it does not make sense for you to itemize your deductions. You want the largest number here because that means you legally pay less in taxes. Many times when people get here, they say, yeah, I itemize. I pay my tithes and offerings. I do charitable donations. And they're really proud to give that to their tax preparer, not knowing that the tax preparer can't use that, or they shouldn't use that, if it's not more than your standard deduction. So if it does not compete with this number, you will not itemize. So we're going to take the standard deduction.
All right, so now we're talking about tax credits. Based on your inputs, you qualify for tax credits for your dependents, right? Because they have 2 kids. Tax credits are amounts you subtract directly from your tax obligation. Do you want to learn more or finish and get your results without tax credits? Let's see the tax credits that we qualify for, or that we could qualify for. So you have child independent related, foreign tax credit, educational, retirement, homeowner, elderly or disabled, business, alternative minimum tax, and energy efficient vehicles. Let's open up the child independent related tab. So it says enter the number of qualifying children under 17. So we're going to put 2. Child independent care taxes. Okay, select the number of qualifying persons. This is for the child independent care tax credit. So let's see, click the question mark. You may be able to claim the child independent care credit if you paid expenses for the care of a qualifying individual to enable you and your spouse, if filing a joint return, to work or actively look for work.
So in this scenario, they don't have kids that they're paying daycare for. This is for a kid who's in daycare. And if that person is paying for dependent care because it helps them or allows them to go to work or actively look for work, then they will put it here. But in this example, we won't. If that fits you, then you will possibly qualify for more if you have daycare or daycare that you're paying for your child to be seen so you can go to work or look for work.
Okay, and then the same thing with enter an estimate of your work-related child independent care expenses. We're also going to leave that one blank. Now, the next one is the earned income tax credit. it says to select the number of qualifying children. So we're going to put 2. Go back. Take that out. All right, and then the last one is adoption tax credit, which the kids are not adopted, so we are going to go to the next step.
And boom, it spits out your results. So this is where the magic happens, and this is the power of this form, because based on everything that you put in, it spits out a result. And you can print this result out and just really understand what it is you filled out, what to expect. A lot of times people used to shy away from filling out the W-4 because their biggest issue was worrying about whether or not they were going to have to owe. Well, the IRS has actually made it seamless to where anybody can understand what is going to be the end result of correcting that W-4, because the results let you know. So in this example, it says, if you do not change your withholding, you are likely to get a refund. So if you keep everything like it is, you are likely to get a refund. Your expected tax withholding is going to be $11,232 throughout the year, and your anticipated tax obligation is $0. This means that you have more kids, or your kids qualifies you to a point to where you're not even going to be being taxed this year throughout the year, but you're still going to get an overtax payment or refund of $11,232 based on your scenario. So that's a refund that you'll get. Part of it is a tax credit based on your situation. This is what we love. They ask you, are you happy with your results? Basically, are you happy with getting a refund of $11,000? Then you don't need to do anything. Want to adjust your results? And now you're able to use this slider to adjust your results. Now, this is going to be a little different from the previous videos because they hadn't paid, or they're not obligated to pay any taxes based on their scenario. However, basically, you can still adjust it if you don't want a large refund throughout the year. So let's see what happens. Do you want to elaborate on this? Because I know you said, I know you like to drive home the fact that we like to give people options.
I mean, yeah, we definitely like giving people options. The thing about the adjuster tool, you guys, the way that this was designed, the IRS is pretty genius for this, okay? If a person decides, you know what, I don't want an $11,000 refund. I want to get a portion of that money throughout the year, and then I want to get a portion of that money at the end. Like, say we do half and half, so a little bit over $5,000 on each end. Well, all you have to do is slide that little adjuster tool to the middle, and then guess what? It's going to tell you exactly how to update your W-4 form and turn it into your employer. It's letting you know the amount that you need withheld on every single paycheck. So we just love giving people options. Typically, we'll tell a person an $11,000 refund. No, why would you let the government hold your money and wait all year before getting a refund that big? You should get it throughout the year, and that way you don't struggle. You don't live paycheck to paycheck. But we understand that that's not the case for some people. Some people just want to be disciplined. Some people, you know, prefer to get it all at the beginning of the year. At the end of the day, whatever you decide, you guys, we just want you to make smart decisions with the money. If you can use this money and pay down debt, establish you an emergency fund, start investing your kids' future, and still have a little bit of fun, definitely go for it.
Now, the money that you'll be able to bring back into your pocket is still coming from your expected tax withholding. That's where they're pulling it from. So when we slide that slider to the middle, it's basically saying you want a refund of $5,500. So the surplus of that, the other $6,000, give or take, will be coming back to you in the form of a pay increase. So it says to get your desired refund amount, you will need $159 withheld from each paycheck, which is $273 less than your current tax withholding. Now, keep in mind, your situation will allow you to literally not have to pay taxes because your tax credit made up for it, but just understand the options. Some people will be more preferred, their preferred decision would be to get a $5,000 refund plus, but also get $5,000 plus in their paycheck every single paycheck so they can do some good things with it throughout the year. We don't want to say you have to do one or the other. We used to say keep all of your money, like she stated, but now we say, hey, do what you feel you deem necessary that best fits your situation. And the power is you don't have to really figure it out. If you make that adjustment, it says download pre-filled out W-4, and they fill it out for you. You can also learn how to adjust your withholding based on what you desire. But they have a pre-filled out form. You print that bad boy out, and you send it to your HR department, and now everything is done, and they can't argue with it because you did it exactly how the IRS suggested. Now, let's just say that you want to break even with the IRS and you don't want a refund at all. So basically, you would just slide that slider and say, you know what, I want to break even. I don't want to owe them, and I don't want them to owe me. So basically, the numbers just changed. They said to get your desired refund amount, you will need $0 withheld from your paycheck. $432 less than your current tax withholding. So that'll put $432 in your paycheck every time you get paid. So every 2 weeks you get an extra $432. And the question is, what do you want to do with that $432? Now, don't expect to get that refund. Don't expect to get the tax credits at the end of the year, because that $11,000 is now coming into your pockets, and now it could possibly, depending on what you do with it, position you to have more than the $11,000, because A, you can probably save some money on interest if you pay down debts. B, you probably invest a portion of that money, which is what we recommend, and now you grew that $11,000 to more than $11,000 because it was invested, and you get some type of return on your investment. The name of this game is just giving you options and figuring out what scenario best fits you, and the same rules apply. You download that pre-filled out W-4 for your own records and to pass out or give to your HR department, and you are good to go. So head of household gives you a larger standard deduction. Your 2 kids, based on their income in this example, qualifies you to pay no taxes, basically, and you determine how you want your refund to come. You got anything else you want to add, Queen?
Nope, that's it.
Head of household. Share this with somebody that you feel may benefit. Type in the comments if it's an example that you would like us to go over. But I know you know a lot of people who have kids and they are basically not married and they're able to file head of household. So share this video with them if you received any value, and look forward to what else we have in store. Understand we talk about money strategies in general, and the W-4 is a key piece to speeding up the debt elimination process. But the fear has been removed because now you know what to expect if you adjust that W-4. That's all we got. Mr. and Mrs. Smith.
Signing out.
Out.